Well, good afternoon, or good morning, good evening, and welcome to the PRI Americas Forum. My name is Pete Dunbar. I work for the PRI and I lead our work on private equity. You probably already realise, but this session is going to focus on human rights in private equity. And we've got some great people with us today who are going to talk about a range of issues surrounding both human rights and private equity. So let's, if we can, do a round of introductions first of panelists. So maybe Kate, if we can just start with you.
Hi, I'm Kate Larsen from SupplyESChange for Environmental Social. I work on the wider business human rights area, but with specialism in the supply chains and that footprint from around 17 years in CSR morphing into ESG. Speak Chinese and have lived and worked in China and Asia, but also for US retailers, Director of Responsible Sourcing, projects for Human Rights Watch and the World Bank, and advise private equity on ESG with specific reference to these areas and train on how to manage those.
Thanks, Kate. Dawn, would you like to go next?
Hi, everyone. I'm Dawn Powell. I work at StepStone Group as part of the responsible investment team. StepStone Group helps institutional investors create customized portfolios across the private markets. We've been UNPRI signatories since 2013, and since then have been integrating ESG into everything we do. We are seeing a really increased focus on human rights. It's of increased importance to our clients, and we believe it's just a core part of doing quality ESG management. And that's why we're happy to be on this panel today.
Thanks, Dawn. Shami?
Thanks, Pete. Hi, everyone. My name is Shami Nissan, and I'm the head of responsible investing at Actis. I'm also a member of executive committee. So Actis, for those of you that don't know, invests in emerging markets. So we have businesses in Latin America, Africa, India, and the Far East. So very much focused on Southern Hemisphere. And of course, human rights risks can have a heightened profile in those markets, but I do want to hasten to add that it is not exclusively at all an emerging markets risk, as we all know. Thanks, Pete.
Right, thanks, Shami. So let me just spend a couple of minutes at the outset here before we launch into the panel itself, just to frame it, I guess. So many of you, or some of you may know, some of you may not know, that the PRI, in formulating its next 3-year strategy, has elevated human rights up to joint top billing with climate change. So human rights are going to be central to many of our projects and programs over the coming years. And at this, our online Americas Forum, as well as this session on private equity, we'll have John Ruggie, Professor of Human Rights and International Affairs at the Harvard Kennedy School, give a keynote address on the topic tomorrow, which is between 11 a.m. and 11:25 a.m. EST. So what is it we actually mean about the umbrella term? What do we mean when we talk about human rights in its sort of umbrella term form? Well, the UN Universal Declaration on Human Rights is broad and includes some of the worst forms of human rights abuses, such as modern slavery and child labour. And these are the things which private equity investors in general are often used to thinking about, especially if in EM, but as Shami says, it is not just an emerging markets issue. But it is a broad topic, and we want to try to get away from the idea that it is purely about those relatively well-known areas. So, for example, human rights overlaps with a number of other ESG topics, such as health and safety or diversity and inclusion, because the Declaration states that all are equal before the law and are entitled to freedom from discrimination. It even overlaps with topics such as data security, which I think Dawn is going to come on to a little later. And this is kind of rising up the agenda. For example, Human Rights Watch in the last couple of days has been calling, amongst other things, for the next US administration to adopt a comprehensive data protection law to ensure people's data is not exploited in violation with people's privacy rights. And I think Shami may talk about some of this as well, because in many countries, those kind of laws do not exist. It's also increasingly expected that human rights due diligence, or HRDD, is undertaken by businesses as per the UN guiding principles, or the UNGPs. The OECD guidelines for multinational enterprises and laws such as the UK's Modern Slavery Act and the French Duty of Vigilance law, which Kate's going to speak around a little too. But one of HRDD's distinct features is that it should focus on the risks faced by the rights holders rather than purely the risks faced by businesses themselves. So it's a little different. But however, a failure to identify, prevent and address human rights impacts in portfolio companies can clearly still lead to reputational, operational, financial and legal risk for those companies and GPs. So what's the responsibility of PE investors for human rights impacts? Well, according to the UNGPs, all business enterprises, regardless of the sector, have a responsibility to respect human rights and to carry out the necessary HRDD. That, of course, includes private equity and general partners. And particularly because of the nature of PE, a GP has a high degree of influence over portfolio companies, which may at times be considered of such a significant nature that it no longer qualifies as leverage, and not leverage in the financial sense, but as in degrees of control, but it instead actually constitutes control, as we know. And in such a case, the GP may actually be deemed responsible for ceasing or preventing the action causing the harm, rather than simply just needing to exercise its leverage over those third parties. So that's my sort of framing of the session. And I think we'll start with Kate, who is going to go over some of the key legislation and guidance that's actually pertinent around human rights to private equity investors.
Thanks. I'll just bring up a slide. I think it's just showing now. There's been a flurry of new legislation in this area, and that's why I thought it's probably easier to show you on a slide. And so great to see so many people watching, because there is a lot happening in the space, and that's what PRI has picked up on. So in terms of new regulations, I'm starting actually over there on the USA, but most of you are probably more familiar in the middle with the UK Modern Slavery Act, which actually came on the back of the California Transparency Supply Chains Act, and then Australia's recently and Queensland brought those through as well. But really the update here is more about Europe. Why is that relevant to you as America's investors? Because similarly to those modern slavery acts, the conversation is that these laws are likely to affect any company from anywhere around the world that does business in Europe. And so Germany, the picture you can see on the right there is a photo of a German government official discussing the draft German business human rights due diligence legislation, which they've promised to draft out early next year. Very similarly to the French legislation, which was already passed. We've seen CEOs of many companies speaking in support of that. Back in the USA, I just want to touch also on the TEFTA, the Tariff Act, because that's been enforced significantly since it was brought into effect at the end of the Obama administration. One of the few areas you get bipartisan support strongly. And some companies have faced WROs, that's withhold release orders of their goods being seized by US Customs. That's been increasing significantly in the past year or two against goods alleged to be made under conditions of forced labor abroad. So I realize that is still in that forced labor space. But my point of this slide is more that there's a lot of legislation to worry about, so to speak, which is why I have a next slide and just to pick up on what Peter said, which is that all of this legislation essentially asks companies to do the same thing and investors to do the same thing with the companies they're working with or your own operations as well. Those things, those steps, are what I've put on the right there, and they come out of the UN guiding principles that Peter referenced, which were promulgated 2011 with unanimous UN support. That's 150 countries or so backing them. And those steps there around policy assessment are pretty familiar steps. I think some of the differences that I want to call out is that they're in response to new risk. And so what's expected these days is that there is that greater due diligence ongoing. That's why it's a circle and a process. And finally, that companies report on that publicly and regularly. So you've seen that with the UK Modern Slavery Act. We've seen that with the French human rights due diligence law. We're seeing all these laws coming through, expecting that publishing, that communication there, that circle in the middle of what was done. Why does this matter? Because there are new lawsuits coming through of holding companies to account for having done this. Peter's touched on the liability. I'm not going to speak too much to that, except to say that if a company in your portfolio is doing these steps properly throughout, then they will A, meet expectations of most of those laws, and B, will also sort of be somewhat protecting themselves and possibly your organization as the PE from lawsuits. And also, finally, that feeds into ESG ratings, and then that feeds further into delivering on the social impacts. You've seen I put the SDGs there. So decent work, no poverty. These are some of the fundamental social sustainable development goals we hear about. I just quickly touch, finally, before I end my time, on what we mean by new risks. There are country-level risks with what's been happening for the Uyghur people in China in 2 or 3 ways there. That touches on data privacy, surveillance issues, and rights to privacy. That touches on forced labor again and decent work rights, and also on engagement with entities that are involved in human rights abuses. But we're seeing similar with country risks around the world. India, Cambodia, as human rights deteriorate, but as was mentioned also in the West, as in the UK, a company can only expect a labour audit by labour inspectors once every 500 years. So we see a lot of modern slavery and exploitation occurring in those situations, as well as that complication of the data privacy side, which I think some of our other speakers will talk about today. So I'll stop there and come back to some of these a bit further on. Thank you.
Yep, thanks, Kate. And I think we're going to come back to Kate as well around some sort of, the particularly sort of risky, high-risk industries that US investors may also be investing in as well in a moment. But Dawn, if we could move to you, please. You obviously work for StepStone, and I don't know how many GP relationships StepStone has, but it must be quite a few. So, with those kind of insights into the market, can you just shifting to what the private equity industry is or isn't doing on this front? Can you just tell us the kind of practices you're seeing in the North and the South American markets, and what might be leading practice in terms of HRDD that you see?
Yeah, thanks, Pete. First, to set the stage, I think I'll take a quick step back because if a GP doesn't have an ESG program that's quality, then they're not going to do quality human rights due diligence. So as an advisor and an LP ourselves, we're really focused on the GP's approach to ESG and the corresponding flows of information that are happening throughout the holding period. So I think even when Pete and I used to work together about 5 years ago, the market was, why? Moving from why to how. Why do we need an ESG policy to how can we do this well? I think now the market's moving from how to how well. And we see a lot of GPs that have policies and have maybe some processes during due diligence, but they're not necessarily thorough or quality. And then they fall short in implementation. So the risks or opportunities that are flagged during due diligence then are not followed through as value creation initiatives through the hold period. And maybe the monitoring and reporting flows aren't quite established at the outset either. So I will say the GPs who don't have ESG policies, they're very much in the minority. We'll engage with them on adopting a policy. That's, part of what we do. I think the largest group of GPs really do belong in this middle group of, they've done the bare minimum and now they're moving. Now we're working with them to show clear value creation initiatives through case studies so that we can actually see that they've taken the policy out of the drawer and put it into practice. So I think on the leading practice, we do really rely on those case studies. Of course, a policy that addresses human rights or a separate human rights policy is a good starting point, but we like to see those case studies. So show us some examples of how you've actually implemented this with your portfolio companies, and maybe show us some examples of the reporting that you do to your LPs so we can see the level of transparency that you provide. So yeah, in turn, we've really had to deepen our diligence approach to not just ask about ESG, because that's become sort of a huge umbrella topic that there's so much in there in each of the E, the S, and the G, to asking specific questions on climate and human rights is the next big area.
Thanks. And actually, that might be a good opportunity for me to plug some work that we'll be doing. We'll actually be putting out a call for some case studies from GPs on human rights and its integration into investment processes. So if anyone out there listening has a good idea for a case study, please do get in touch. Dawn, I guess, there seems to be quite a sort of wide-ranging practice in this area. I mean, when LPs are assessing GPs' ESG abilities, there's all sorts of ways of doing it, scorecards, checklists, rubrics, all the rest of it. How do you guys do you rank GPs on their ability to integrate human rights particularly, or is it more of an overall sort of ESG approach that you have?
Yeah, so we have an overall ESG approach for every primary investment we make. We do a ESG scorecard. And on the co-investments, I think perhaps this is more interesting to the audience, we not only assess how the GP's overall approach to human rights and all of the other relevant issues are, but we also assess specific to the asset, and we map to the SASB disclosure topics that are relevant for the specific sector. And often, in those are a lot of the relevant human rights issues that get flagged around, operational health and safety, around diversity, around data rights. And we check to see if the GP has included that in their diligence process and if they've engaged any external specialists to specifically look into any of these areas. So while we don't have a specific score for human rights, we are looking at it holistically. I would say the data that we're collecting at investment at the time in investment specific to this topic area is really diversity. I think that's one of the most digestible areas, and it's something that we've seen an influx of interest from clients over the last 6 months as events have unfolded in the US, and there's been a heightened awareness around racial justice efforts. We collect diversity data at the GP level. So this is not just something that we want to see GPs, doing at the asset level, but we want to see them also walking the talk and implementing diverse initiatives and teams at their own firm level.
Nice. And I mean, you mentioned clients there, and typically it's asset owners and LPs that sort of drive things in private markets. Are you seeing much interest in human rights issues from your clients and LPs? And if so, what drives that?
Yeah, absolutely. So I think the focus that we've seen in even over just the last year or two has really been driven by the UK Modern Slavery Act and also the relevant legislation in Australia. So clients based in the UK and Australia in those jurisdictions are, asking us about what we do on modern slavery, and that in turn, then we start querying our GPs more rigorously on those issues. So yes, we're seeing a huge uptick, but it has been mostly focused on modern slavery to date. I think now, especially with the work of PRI, we're starting to get queries on a broader realm of human rights and, stakeholder engagement approaches. So anyways, it just really speaks to the power of regulation to drive change. And I think it's also forced us back to the walk the talk to evaluate, modern slavery in our own operations. We conducted a, supply chain risk assessment, included it in our vendor due diligence, issued our own modern slavery statement. So it's not something that GPs at the corporate level are exempt from either.
Great. And so I guess my next question is around DDQs. So when you're looking to invest in a fund, the ALPA DDQ obviously has adopted the PRI's ESG DDQ, and that makes up their ESG section. But there's nothing about human rights in there or the rest of ILPA's DDQ, let's say. But for you, as an LP, is there anything in your DDQs, or do you see anything out there kind of in the market in terms of DDQs that properly addresses and gets to sort of help you understand how a GP actually does or doesn't incorporate human rights?
Yeah, so this is definitely an area where we see the guidance is a little bit behind on in terms of what clients are expecting and the level of diligence that we like to do. So we've had to go out on our own a little bit and have more detailed questions around human rights, climate, these specific issues, because as I said, ESG is turned into this just huge umbrella topic. And we have, when you ask a GP, do you integrate ESG considerations into your investment process? And they say, yes, we do. And all of the examples around governance. I mean, that's wonderful. That's great, but it's not enough. They're not always raising the material E&S risks. And to say, oh, none were identified, that's just not adequate. There's always going to be, E&S risks and opportunities. So yes, we have had to edit our DDQs, and we sympathize with the GPs that are getting a huge influx of varied DDQs from different LPs. And we'd be happy to work together on, some kind of collective effort to move the industry forward on this. But I think, especially for us, diligence is so important. We have to get it right at the outset. So we have to be making these queries because we are one step removed post-investment. Go ahead, Pete.
No, I was just saying, you are one step removed with fund investing, but you're also investing in directly in co-invests.
Yep.
So how's that different? I mean, you're basically then in GP's shoes. So how are you kind of tackling that?
Yeah, so I think I referenced a little bit before. I mean, we're never competing with GPs for deals, right? We're always investing alongside a partner GP. So we'll take the primary ESG due diligence that we've done and assess, their overall approach to ESG, inclusive of climate, human rights, diversity, all of these issues that we've been talking about. But then we also have integrated the SASB disclosure topics into our system so that when we, when our deal teams have to complete an ESG due diligence, they'll see prompts around the relevant SASB disclosure topics based on the gig sector. And then, we have a review process for that with our work groups and committees. And we not only review the ESG due diligence on the asset that the GP has completed, but we see if there are any holes, and also flag the risks and opportunities that we see that the GP might have missed and seek to engage on those issues. So, just a couple of recent examples, we have passed on a recent investment due to poor safety metrics. It just flags that this asset was a lot more hands-on than we had originally thought, and we just didn't think that we could get there. And in other cases, it's not just a pass if we flag a risk that we don't, if we flag a risk that we can see can be mitigated, then we'll just require increased transparency and focus in reporting. And I think back to the data rights issue, we've seen, for software investments, for health tech investments, for these kind of asset-light industries that typically, human rights wouldn't be at the forefront of GPs' minds, or even, our internal team's minds. We're really ramping up the focus on making sure that cybersecurity and data rights and data privacy are addressed. So we're flagging that for almost every technology investment. And yeah, like I said, because we're not as active during the hold period, it's really important that we flag those issues at the outset and define any metrics or reporting at investment, because after close, it's really easy to lose that momentum.
Brilliant. Thank you very much. Thanks for that. So I think now we'll move to Shami, who's going to sort of bring some of this to even more life with a couple of examples from the Actis portfolio, who I know generally are more hands-on, I suppose, during the monitoring process as well. It's not just about the DD on the way in. So Shami, over to you.
Thanks, Pete. So let me take about 10 minutes, I guess, to share our approach and our thinking, and just provide some, I guess, perspectives from a practitioner. And just to start off by saying, I think it's really important what was said earlier about the difference between ESG DD and human rights DD. It's not the same thing. Now, do we do an HRDD piece every single time? No, that's a decision that needs to be taken with a lot of thought, and it needs to be done, where in a proper manner. And the point is that it needs to be done from the point of view of the rights holder. So we have some experience of, work that we have done before the investment decision on securing some HRDD work streams to inform the investment decision-making process. And then after that, I guess during the value creation phase, how do you monitor that? So I just want to share a few examples, Pete. And I also want to sort of emphasize that human rights are, relevant to every investor. Doesn't matter where you're based, and they're relevant to every industry. It's not just, the ones that we think of in terms of fashion and what have you. If you have companies with complex supply chains stretching across the world, if you have companies with assets, people on the ground in, for example, Africa or India, then you need to obviously think about things like working conditions, health and safety, migrant labor. All of those things have been on our minds, and COVID actually has created an extra stress in that light as well. So I can touch on that. But let me just say, sort of from an Actis point of view, we've been around about 16 years. We've always had a dedicated in-house ESG team. So this is something we've looked at from the beginning. And we've applied sort of the lessons learned, if you like. So a few scars on our backs as well. But just to make it real, I mean, one of the recent projects that we looked at was a renewable energy project in Mexico. We do a lot of renewable energy investing. We do a lot in Latin America, Mexico, Chile, Uruguay, Guatemala, Brazil. And these are really complicated environments in which to be investing into physical large infrastructure that is placed usually in remote areas near communities that tend to be remote, perhaps experiencing levels of poverty, perhaps low literacy levels, not high educational attainment levels. Some are not even educated on what their actual human rights are. So to do a proper assessment whereby you understand and are comfortable that they have really truly given their consent can be really, really challenging. And so when we were looking at developing a project, which we needed to do according to the IFC standard of FPIC, which is free, prior, and informed consent, it's a very high bar. That was an example of where the social bit of the ESG due diligence just wasn't going to cut it for us. And we got a human rights consultant in to help us really get 1,000% comfortable that those communities, local farmers, smallholder farmers, they're called ejidos, so it's kind of like a traditional land ownership model, that they truly understood what this project was going to be about, how it was going to influence and affect them. Lots of indigenous people within that community, also, of course, marginalized people. So when you are looking for that consultation and for their consent, you need to make sure you have the right people in the room, so to speak. So where are the women? Where are the elderly? Where are the young? Because failing to do all of those things means that they haven't truly given their consent. So that's an example where we wanted to make sure that everything that was being done was following not just the IFC standard, but of course the UN guiding principles as well. And there are occasions where we walk down that path, Pete, and we just don't get comfortable enough. And if that happens, one could bulldoze your way into these things, cross your fingers and hope for the best, but that's not something that Actis would ever condone. And we take our responsibility incredibly seriously to our own investors who have entrusted us with their capital, to our people, our brand. So we just don't go there unless we're very, very comfortable. So, you know, the indigenous component makes that more difficult. In Brazil, we have the Quilombola community, which is, again, like an indigenous minority. It's the descendants of the slaves, separate to the sort of Amazonian Indians. So almost everywhere you look, you have these quite complicated situations, which is where it is really important to understand from a bottom-up point of view, what is their perspective as a rights holder and how are they experiencing or potentially experiencing this investment. Let me just move on to a slightly different example. Lots of, you know, B2C companies, complex supply chains. Again, we experience that. We have a homewares company with 60% of its products come from Vietnam and China and Indonesia. So again, there we're relying a lot on so-called kind of ethical audits, human rights audits. It really helps when you have other buyers that are applying their own ethical or human rights audits, so you can leverage or piggyback off of those efforts. But we supplement that with our own diligence, with surprise visits, you know, with very, very high levels of monitoring, just to be really, really comfortable that everything is being done in accordance, you know, with the standards that we need, which is UNGPs, which are explicitly referenced in our own policies. And then another example, I suppose, is construction work. I mentioned that can be very, very different in some of the developing markets. So I am not talking about kind of like luxury working conditions here. I'm talking about very basic things. In India, half the construction sites don't even have toilets. So we're talking ventilation, space, getting your salary, not having your documents withheld, having sufficient breaks, water, all of those things, really important. So for some of our India sites, we actually use, again, like a human rights type of audit that we repeat on an annual basis to make sure that those individuals that are in the worker accommodation centers have access to all of their basic human rights and all of their basic needs. And the reason that I highlight India is because it's a country where labor agents are frequently used to help secure large volumes of migrant labor. So within India, and that's always a red flag, because you need to be comfortable that the agent that you're using isn't kind of withholding any kind of identification or documentation on behalf of those workers, because that basically becomes bonded labor. in a COVID context, in a country that had a very strict lockdown, what effectively happened in India is those construction workers couldn't work on the construction sites because of lockdown. They were also forbidden to transport themselves back home, typically to their kind of like farms and where they really wanted to go to be with their families. So we kind of faced a situation where we had almost kind of like entrapped workers, and our duty of care to them, of course, was still applicable, but to a much higher standard because of the medical and health risks of COVID. So lots of very complicated things. And again, relying on expert third parties to ensure that we're doing everything that we are required to do, but more, was really crucial advice for us. So, and then if I can just quickly land just for 1 minute on another, a couple of other series of points, just to kind of share this patchwork quilt. Investing in China can be very complicated. We have Muslim ethnic minorities that we know are being persecuted. The Uyghurs, Kate touched on that. We have things like data privacy, the use of mobile phones, leapfrogging the traditional financial and banking system in OECD markets, means that in certain regimes, people can track your financial wallet on your phone, as well as your movements, as where did you go when you made that payment, that transaction, or that withdrawal. Now, certain regimes, sadly, in certain countries are keen for that data to support their surveillance activities, basically. So very difficult when you think about it from an ESG point of view. And then there's also physical security. As we see greater unrest off the back of COVID, people are using third-party security firms more. And of course, you need to be very, very careful about the use of force and how those third parties act on your behalf. Lots of training is required there to make sure that they stay in line with international guidance. So it's not a straightforward area. It's very complicated, and there's a significant responsibility that the GP needs to take on and have their eyes really wide open before they make an investment decision. I'll stop there, Pete.
Okay, fantastic. Thanks, Shami. That's great. And we've got a couple of questions coming in, but we'll try to get to those at the end. I think hopefully we'll kind of have maybe 10 minutes. At the end of the session, we'll come to those questions. So, Kate, if we can, we can move back to you. Kind of coming back, I guess, to North American investors. I mean, obviously, EM is important in the supply chains of those companies they invest in, and some, US PE shops do actually invest directly in EM as well. But in terms of industries in the US and Canada, can you just kind of run through some of the higher risk ones and the kind of red flags to watch out for PE firms when they're investing?
Yeah, I'm sure. I'll go through some of them in a second because Shami's covered quite a lot, and I'll just touch on a few others that are emerging as well. I just wanted to pick up on one other thing that both Shami and Dawn touched on, which is so different about the point they made about how human rights due diligence is different to ESG. And that would be that they both talked about stakeholders. And that's clearly referenced throughout the UN guiding principles. And then as you see flows into all those other laws coming through. And when we say stakeholders, we mean communities, we mean workers, and we even see companies collaborating with trade unions. Shami or Dawn used the word consultation, but what we actually see is engagement and collaboration in initiatives of companies with these bodies. With these types of stakeholders, which, trade unions can be a scary stakeholder for a lot of companies who are quite resistant to that engagement, but that is the shift that's been happening and that is expected. The second difference I wanted to mention was the reference of the rights holders being the focus. And this is where there's been a bit of a debate on human rights about, or not a debate, but a change in that we don't focus on what's material as we do in ESG. We focus on what's salient. And that is, what is the impact on the rights holder being more important than how material this is to our business, which possibly slightly answers that second question that's come through in the question box down there. So thanks for the questions. That's fantastic. Red flags, if you're sitting there in the US as a USPE or with US companies, firstly, we've all mentioned this, is imports and that forced labor and exploitation issue. but also around seafarers, around logistics. We're seeing those sorts of cases coming up the agenda significantly these days as well. And then there's an overlap, but the third difference here would be with environmental. I just wanted to mention as well that the French law and the proposed German law specifically reference that the business human rights due diligence expected is also with regard to environmental impact, and the concept there being that if we're polluting a waterway, we're having an impact on people's human rights and their right to a decent livelihood. But just back to those red flags you wanted, Peter, from cocoa to cobalt, you want to be worrying and concerned, as Shami's described, about imports and how people are working in their conditions around the world. Back in the USA, though, or in North America even, and so that obviously includes Latin America significantly. And sorry, just what we've seen this year with those migration, or the recent years with the migration flows, we've all heard about the children. But actually, when I've worked on projects where we look at production operations, be they agriculture or a factory anywhere in Latin America, we're looking at the risk of modern slavery, the risk of exploitation, or if a factory is about to be built, as Shami talked about those impacts on communities, and were they properly engaged, as Shami referenced. And with that flow of migration, somewhat impacted by climate change sometimes, that we've seen the children of in the headlines, but it's actually about people. We're seeing that creates a risk of modern slavery in particular, but of that overall human rights abuses as well. So as people flow in and out of business footprints there. But back in, as I said, the USA and Canada, some of that is people ending up working in the US. In COVID, we saw issues with migrant workers in agriculture and meat production being some of those most greatly affected by COVID most rapidly. We've seen that in the UK as well, but in the USA, when their conditions of work are poorer because they're migrants, because they've come, because they're willing to earn less money for hard work, and often were the last to be provided with the PPE that was needed for working in close quarters. Even prior to COVID, though, we were seeing issues with logistics, with truck driving in the USA, people ending up in sort of bonded labor type situations. And obviously, probably most of you are probably aware of what we've seen around pipelines in the USA and Canada and impacts on indigenous communities. And those are all definitely considered human rights issues. And that's where, again, that stakeholder engagement approach, that outreach to those parties who represent those affected parties, and that ongoing process of working with them is what's expected by business now, rather than not engaging and not talking. And Shami sort of described some of the good practice there that can be done. And I just want to touch quickly on that question on the impact of COVID on human rights monitoring and supply chains. This is not really an American specific, so sorry, Peter, but because it's relevant everywhere. And that is that, I have a background in having done a lot of those field social audits of labor standards and human rights conditions around the world, and work with a network of associates around the world who do that and are experts in that. And that has been difficult, because you can't travel. If you can't travel, that's normally that face-to-face of interviewing workers or interviewing community members. As I've been saying, that engagement piece is what's most crucial. We've had, what are we at, sort of 8 months of this possibly now. And so there's been a lot of remote efforts of trying to interview workers remotely in a factory, of interview stakeholders. But, the effort of the ASPI to identify that 80 multinationals were found to have Uyghur workers in forced labor in their China supply chains demonstrates how much can be done at a desk-based level, because most of that was actually desk-based research, which would give me my other red flag for you right now, which is that with the growth of the internet and tech and data, and we're all sort of thinking about big data on the human rights front, that means that information is flowing much faster and that issues are coming up much faster. And what I mean by that is the chance of issues in your the company in your portfolio's footprint ending up having issues highlighted is faster every day, as I say, from cocoa to cobalt, right the way through. But coming back to that diagram I showed of if those steps are being taken, that Shami's outlined how it can be done, that Dawn's talked about how that engagement can work at other levels, you can get on top and get ahead of the media or the scandal cases, so to speak. So I want to just end what I'm saying here by talking about, touch on what we all wanted you all to take away, we felt was quite important: the privacy, the data monitoring side, the surveillance side. I mean, in the Americas, we've seen an issue with Amazon and their warehouses in recent months being called out over tracking and starting to monitor where every employee was going every minute, and human rights abuses allegations being made around that. So it's very much in the Americas issue, as well as just a global issue. That risk that, Dawn described, how moving to looking at how the portfolio is really, whether they're doing any monitoring of how they respect data rights and those human rights to freedom of movement and freedom of data and personal life. Overall, the Americas are no different in a sense. I don't think they should be considered. Shami's right that in developing countries or other countries there are issues, but we see a lot of the same issues in the Americas. We're just talking about a different wage level or slightly more educated or a slightly more westernized population, but essentially the same risks of exploitation exist, and even in Italy as well. That I can walk into a factory and find similar conditions to China or India tomorrow. So the same in the USA. We've seen LA, New York, the same things happening. And
in the UK too.
Yes, absolutely. A high-profile case this summer of Boohoo, the online retailer, being called out. Their stock price massively hit. Obviously not relevant to private equity, but just worth understanding that the issue there was many of us who've worked in apparel for many years could see, and I was part of a rating that last year rated Boohoo as not doing good effort on essentially human rights due diligence, and that has come to hit them in a spectacularly not very nice for them way, being slandered all over the headlines everywhere. And essentially what I'm saying there is they didn't do the human rights due diligence expected. Other companies buying from Leicester in the UK where workers were exploited and ended up sharing COVID because they were not provided PPE, not allowed to take time off work. Other buyers had done the right due diligence. Some of them were PE owned, actually. So It can be done. You can get ahead of the risk, essentially.
It can be done. Thanks for that. Maybe we've got those kind of two questions. One's around COVID and its impact on monitoring and stuff, which we've pretty much covered, I guess. Although I'd be interested, maybe Shami, if you can, you were talking about you would normally do surprise visits and things. Obviously, those things you can't do now. So maybe just 30 seconds on the nuts and bolts for any other GP that's out there thinking, okay, how maybe they're not even doing human rights due diligence to much extent at the moment. Like, what would your advice be at the moment to kind of go for a GP to go from zero to something on this front?
Well, I would say, if you don't have the in-house expertise, that's fine. And this is not a straightforward thing that you can easily kind of jump into or segue into. So I would say, seek some support and some advice from an expert. Start at the top with your policy. Understand that you are legally and reputationally safer if you have a policy than if you don't. Because if something goes wrong and you don't even have a policy, you really don't have a moral legal leg to stand on. At least if you have a policy that sets in motion a chain reaction of policy and process and monitoring. So I would say, Pete, start there. On the question of pandemic, I think it is difficult to do those monitoring visits. I mean, there are things like local consultants, and of course we have social media, thankfully, that helps us understand things instantly and visually. But in a way, it has made it more difficult, and I've seen this with our own kind of assets, just from a purely like health and safety point of view. A lower level of supervision can result in people getting a bit complacent, a little bit of like PPE fatigue, so you can imagine that certain shortcuts might be taken more easily without that level of monitoring. But I think the silver lining of COVID and supply chains is that we are seeing people re-engineer supply chains to be more local, more regional, and less complicated. And that should help us because, if you do that, you have less complexity and greater visibility and traceability. So I think that's a positive force that's kind of offsetting what might be a bit of a doom and gloom answer for me originally.
Okay, no, thanks. The other question, I don't actually know whether the audience can see the questions that have come in. So maybe, I mean, it's around how PE investors consider how they can use their leverage and value creation process to support protecting human rights of workers in the light of, how is it weighed against other commonly reported PE strategies such as cost cutting or increasing efficiency. So I don't know who wants to maybe have a bit of a stab at this. Kate's got her hand up. Dawn's got her hand up. Maybe we can go to Dawn because we haven't been to Dawn for a bit. But the private equity does not have a great public image. There are GPs out there that are kind of doing things and trying to figure out how to more comprehensively compensate employees of portfolio companies, for example, beyond the normal sort of ESOPs for senior management. So there are kind of initiatives out there that are thinking about this. But how do you? We're talking about human rights and labor rights and stuff. How do you kind of think about that in one hand, and in the other hand, we're often talking about efficiencies and cost cutting in private equity.
Yeah, so I think even if you increase your cost base with some of these initiatives, there are two other levers that you can pull. So one is just increasing the top line. So we've seen, when you engage stakeholders, especially customers, they want to see that the workers are being treated right. And when an asset is managed well, that can lead to increased revenue growth because it'll attract more customers that care about these issues. The other lever, besides, sorry, come back to me.
Well, I'll just pick up and quickly say this is not a unique to private equity conversation. This is what every business grapples with, which is, weighing against cost cutting, increased efficiency. It's the same question we have every time we talk about corporate responsibility or ESG, human rights. Firstly, and secondly, sort of the answer then comes back to, how much weight do you put on risk management as a company and on utilizing these approaches to generate value creation. There's been a lot of research in the area of ESG around if you do work on certain areas of ESG, you generate value creation. We can sort of say the same, that maybe the research hasn't been done, but if you read into that research, some of what they're looking at is essentially business human rights due diligence steps being taken by companies that then generate better performance over time. And because you're protecting the brand, because you're ahead. And I just described an example of one retailer, going through a situation when others had actually done the work up front. So, and in Shami's case, she's talking about situations on the ground there. If you don't engage these communities, that can stop your project going ahead. There's a license to operate there. So there's that side. And around cost cutting, the same question on anything on people management as well. Are we better off investing in our people or are we better off cost cutting? You've got to weigh every single cost cutting question against that, essentially. How much do we want to invest in people generally? But then in terms of leverage, the PE investors I've worked with, I think the reason I love working with PE investors on this front is because you sit on the board. You do have a voice. Okay, there's a lot going on, and it can be hard to sort of feed in on that. But your voice is taken seriously, and also you're bringing an insight into what other companies are doing and what's generally going on. And sometimes the companies you're dealing with are so stuck in their sector that they're not seeing that wider picture of what's generally expected and that vision ahead of where things are going. So, in terms of how you can use your leverage, I would say is to somewhat build that awareness and set that higher expectation. That's why you're there. That's why you invest in this company, because you want to see them move forward. And part of that is about being up with the play on the legislation I described, and then the risks and the potential for that in value creation.
Yeah, I'll just quickly add that on my second point, I think Kate summarized it nicely. It's multiple expansion. So if you manage this asset well, when you go to sell it, you're gonna have a bow tied on all of the human rights, and there's not going to be any issues, and that's going to increase your value at sale. So I think that's the second lever that I wanted to touch on.
Yeah.
Well, maybe just before we kind of go to a round of sort of closing remarks in the last few minutes, Dawn, you mentioned something earlier around, you see a lot of GPs that'll flag up issues during due diligence, and then they kind of get filed away somewhere throughout the holding period. That seems kind of a bit of a problem across the industry, and not just human rights, but many other ESG issues as well. So what do you think can change to do that? Is it about using the more standard non-ESG sort of tools of private equity, like 100-day plans, to make sure that things are kind of put in there? Is it about better integration with investment teams and making sure documentation gets to investment committee? Is it all of the above? What like kind of how can people improve?
Yeah, absolutely. So we love to see obviously dedicated and ESG resources are great, to have leadership and training and focus on these issues, and somebody who's held accountable for these issues internally. But we love to see integration into the responsibilities of investment team members, and ultimately the people who are sitting on the boards and in the board meetings, right? Because if these issues aren't top of mind for them, then it's really hard to get it on the agenda. So yes, we like to see whatever is flagged during due diligence, it gets integrated into a 100-day plan if it's a really urgent issue, or just in a longer term value creation plan if it's, an opportunity for improvement over a longer period. And we love to see GPs really putting this on the agenda of their portfolio board companies, right? So if it's not on a portfolio company board agenda on a frequent basis, then a lot of this data or progress on the initiatives won't get reported or monitored.
And great, yeah, and we actually put a piece out that was commissioned through Debevoise and Plimpton a couple of months ago on the duties of US directors as it pertains to ESG. So if anyone's interested in that, you can find it on the PRI website in the private equity section. So I guess we've probably got like 2.5 minutes or something left. Maybe if we can do a quick round of sort of just final thoughts to leave with people. Maybe Kate, do you want to go first?
Sure. Okay, thanks. Just to pick up on what Dawn said, I think you both referenced, which is on that board level sign off, the 100-day plan and the long-term value creation. Going forward, my message is that human rights due diligence, which Peter described it, and then I've kind of gone into showing the flurry of it rolling out, is coming. And with the Modern Slavery Acts, we saw that the board have to sign off on the statement. You have to have read it. You have to have known what is going on. You have to have something to say as a company, be you the PE or the asset. And the same is happening on human rights due diligence. Companies are being asked, and many already do, that today was the corporate human rights benchmark release, where they've rated about 200 of the world's largest companies on how much they've published on their human rights due diligence. And again, they start at the top with, is the board signing off on this? Is there board level awareness and engagement involvement? So absolutely, you should be involved in this. And then that's now being expanded in coming years to 2,000 of the world's largest companies. And obviously with technology, that can then become thousands. So it's coming your way. You're getting rated on it anyway.
It is indeed. Kate, I'm sorry, we've got 40 seconds, I think, to get Shami and Dawn. So Shami?
Yeah, look, same as Kate said, this is an egregious risk. This is like a brand destruction area. It's also value creation. If you get it right, you can show that to your next buyer. So, it goes to the heart of ESG. It goes to the heart of your values. You can be a force for good as an investor. So what's your choice? Do you want to ignore it, or do you want to engage and have a more positive outcome? So it's a no-brainer, and don't cut any corners.
Brilliant. And Dawn, to wrap up?
Yeah. I couldn't have said it any better. I echo everything my co-panelists have said.
Fantastic. Okay, I think we've finished exactly on time. So thanks.
Good sharing.
And thanks to everyone else watching. Brilliant. Thank you.
Thank you, everyone.
Thank you so much.
Thank you, everyone.
Thank you.
Have a good day then. Thanks. Bye.